And here to tell us a little bit more about the potential effect is Jason Adams, a defence analyst for Nomura right here in London. Thanks for coming in, Jason.
Morning. Thanks for having me.
What can we expect from the government's strategic defence review? That's coming out in a couple of weeks' time. Just how extensive are these cuts likely to be?
Yes, initially I think expectations were that we'd see the UK defence budget be cut by as much as 20%. However, as they go through the process, there are a couple of things that are making achieving such significant cuts difficult, not the least of which are the current war in Afghanistan and consideration for the UK industrial base and all the jobs that are associated with the defence industry. So now it feels like Liam Fox may have been able to lobby something more along the lines of mid-single-digit type of cuts to the Defense Department.
And just take us through some of the numbers we're dealing with here. We're talking about an annual budget, defence budget, I should say, of £37 billion, right?
Yes, that's correct.
And how much would the cuts amount to? You said 20% of that?
Well, that was the initial expectations. However, remember that this government is dealing with a number of procurement plans inherited from the Labour government, such as the commitment to aircraft carriers, the F-35 Joint Strike Fighter program, and these programs are at a stage where walking away from them is politically and economically difficult. So there was to be natural growth to that budget. So the first thing you have to do is cut the budget back to the $37 billion, and then you've got to find savings from there. So you can see this department in particular, it is very politically sensitive to find that amount of cuts.
It's politically sensitive, but many have been arguing that the MOD has been living far beyond its means for many years now. What about the amount of money that they waste in bureaucracy, arms procurement? I mean, there are credible cuts to be made there, right?
Yes, I think the spirit of the law that was proposed the other day to try to get the defense companies to be more efficient in how they price bids is very good for the industry. I mean, overall, the defense industry needs to adopt a more commercial mindset, and the UK taxpayers need to get more better value for money in the defense procurement.
So with that in mind, which companies are likely to do well out of this and which not so well?
Sure. I think, to be honest, all the major European defense companies will be impacted to some degree, but the markets know this, and that's why defense stocks have underperformed the market by 21% this year. So I think the questions investors will be asking coming out of October 20th, when we have clarity, is has this been an overreaction? And then you have a stock like BAE Systems, the UK's largest defense company, is down quite a bit on the year and is now on 7.5 times earnings. And it feels like it's a very good buying opportunity if cuts are not as bad as we expected.
So from what you're saying, what can we expect in relation to stocks and shares in these companies and defense-related companies?
Sure. Well,
over next year?
Let's look back to the U.S. In April 2009, U.S. Secretary of Defense Robert Gates made a number of program cuts. And what happened was all U.S. defense shares were up 6 to 9% across the board. So once again, it shows you when you're dealing with...
So this could give them a boost?
I think so, because expectations are so low. The headlines, et cetera, have been that the defense cuts will be savage. And now I think as the government goes through it and thinks of the foreign policy ramifications as well, they may be rethinking the degree of the cuts that they want to mandate in the next 4 years.
Jason Adams from Nomura, great to get your thoughts. Thanks for coming in.
It's a pleasure.